Hello and welcome investors. Today I'm going to do the stock analysis of the Costco wholesale. The ticker name is COST. Myself Pramod Kumar, I'm a CFA charter holder and FRM certified. And you might be thinking, oh, this is another brick and mortar stores and then what we'll get from here. No, there is a reason for what I am doing it, and I'll share first reason with you immediately, and then one very big reasons after the end of the video, right? But all these the data points what I have collected to see makes that it looks like the Costco is not only a dividend paying company but also looks like as a growth company, still has a growth as well. Okay, so as you can see, and in my agenda is pretty big. I have a special dividends which Costco is paying. Yes, the Costco is paying special dividends, cash dividends, in addition to what's its annual dividend. Plus, we check the liquidity, we check how the Costco is doing in the recent COVID-19 as per the their EPS. Are they doing the shocking the market, or are they basically as per the expectation, right? So that's also key, I think, to move the price. So that's one of the data points there. How about the institutions? How institutions are doing, whether they're buying or they're neglecting it. How Costco is doing in terms of the share purchase or repurchase. Are they issuing more share? So if the company is issuing more share, this means doesn't matter. Even if you buy at the good price, our value will further decline, right? That's what you know. Okay, how much we are paying in terms of the price? Is this justified with the free cash flow with the companies going, or it's just the on the top line and we are getting cheated, right? So that's a very good matrix to show. How's company is operating cash flow compared to its debt, right? So is the company is growing a lot of debt, or can it be supported by its free cash flow? We'll look into it. Of course, then I will check the price using the free cash flow model. I'll open the spreadsheet and then try to compute what's our value, what's our price for the stock, not just the market price, based on the fundamentals of the company. How about the estimated return? If I enter into the price right now, because I cannot for sure use my intrinsic value to enter the market, I only buy the stocks what's in the price available in the market. If I enter it today, what will be my return, assuming I'll hold the stock for 10 years, right? So using the matrix, I find some one of the my YouTubers who commented that they like especially the Wiki Chan, and I also got from other people that they like these kind of matrix. So I thought, why not just include for this as well, and it's helpful for me as well. And then who is the special investors which I really admires, and the whole world admire him. How his portfolios investment in terms of the Costco. So we have as you can see, we have a very good and heavy agenda, and let's get started. So first thing first, so how I catch my attention, I catch my attention on let me share my screen, not just the screenshot. So if I show you here, as you can see, maybe I'll increase the font a little bit and hide myself. Okay, so in November 16, just 1 or 2 days ago, Costco announced they have a very good quarter, right? Their board announced they're declaring a special cash dividend, right? $10 per share. This is not a small amount, right? If you buy one share of Costco, you'll get a $10 back immediately, and that's not too far away. So basically, the cutoff date is 2nd of December 2020. So that's one of the reason. And then by 11 December, you'll have for one share, you'll have that $10 in your pocket, right? So that's the aggregate payment of $4.4 billion. So that's not a small amount. That's $4.48 billion. Here they also mentioned that Costco, if you're not aware of that, which I have a doubt if you're from North America, I believe with the families, people, you see a lot of bags going on with the Costco. They are operating in so many countries, majorly for sure their business in US, but they are big in Canada and then Mexico, and you can see by pausing this video, right? And also now they operate in e-commerce online as well, and as you can see, maybe it's not that great as compared to Amazon, but I think the Costco has its own dedicated clientele, right, which they charge the members. So I'm one of them as well, and I really admire their membership. Just one thing is to highlight here is in their total record net sale is 13.82 billion in the retail month of October, and the 4 week ended 1st of November, the increase by 15.9%. So they're increasing the sale. And even if I don't look into this, and honestly, if I just look into this data as well, the most of the companies where they are basically struggling in terms of aligning, right, in terms of paying. Now Costco during the 2020 times paying extra $10 back. So that's awesome, right? So this shows the power of the business, how much the company is done. So let's continue our journey, and then I'll close this one. Okay. So in this slide, what I'm showing, let me put myself height. Yeah, and I do appreciate if you give a thumbs up to this video, early thumbs up, because it takes a lot of time to collect all those data points and make this kind of a video. So I really admire for that. Okay, thanks for that. Okay, so as you can see, their annual dividend is usually $2.08, but this is the effective date, and that's what is the $10 they are paying, which I have already shown. Right, let's go to the next one. Okay, so let's check now on their liquidity side, right? So for sure, it's good to always check the liquidity is, this is the current year, the annual in millions. So their liquidity is from 2017, 1 2 3 4 5. This is the current year, right? This is good. So this is 113%. So this means their cash, they're having good cash to cover as well. The cash is pure cash or short-term marketable securities is pretty much 54. I expect them, if it's a little over 1 or close to 1, it's much better. But overall, they have enough assets and which also actually this proof, because they are paying extra cash back as well. And if I see comparatively from 2017, the short-term liabilities, right, in terms of expenditure and all, they improve in terms of short-term assets. You see, is improve as if I see from very conservative cash ratio. From the gross profit margin perspective, very consistent, 13%. Really like it. Not even up, not even down. Operating margin, look at this, very consistent, right? And the profit margin is always consistent, right? So that's the beauty, right? I never see that's, if you are following my video, when I put the two flag, this doesn't mean is a red flag, but this means is a good sign, right? Is a happy flag for me. Maybe in the future slide, I should change the colors of the flags. Let's try to change some color. Maybe I'll try green. Okay, so it's, yeah, now it's better. Okay, so this is another aspect. So I just want to also check because pricing, honestly, pricing is easy, right? If you like something, you don't mind to paying a little bit extra as well, just like anything. And stocks are nothing different than that. But the main thing is what the business, the value investor like Charlie Munger and all, or like Mr. Manish Pabrai, right? What they look the moats in the business, right? Whether this is scalable or not, right? It doesn't matter, right? For example, Intel stock, right? Intel stock was cheap right now, right? You can buy, and for sure is below is the price is below its intrinsic value, but it's not moving right now. It just stays there, stales, right? So we don't want to enter into those kind of investment as well. So that's why we're looking from this. And one of the major factor in my perspective when the price moves, right, is when and which the analyst like and the market like is if the reported earning is greater than estimated earning, right? If reported earning per share is greater than expected earning, right? Okay, and we can see here the reported earning is consistently here, it's a little bit equal, but always beat the estimate of the analyst, and this is the past 4 quarter, which is a very good sign. Again, this is a good flag, right? And we expect in this one here as well, because recent in Q4 of 2020, this is a heavy season. It should be up as well. People like to buy, and we are in the COVID situation as well. Second phase, as it's nothing is hidden there, and people like to stock up. And the best place to stock up on the good reasonable price is for sure. What else? It's Costco, right? It's Costco. So I believe this should be up. That's what my opinion here. Okay. What institution is doing? Yeah, that's also very important, right? To not only see from the benchmark perspective, but also from the institution perspective. As you can see, institutions, right? Those are the big giants who holds those funds. They increased the positions, right? If you can see, they increased the position. There are some decrease in position as well, but the increase in positions, right, is greater than decrease position, which is a bullish sign, which is one of the bullish sign in my. So when I try to analyze the stocks, I analyze and only shares if I'm very positive and like about it. That's what honestly my opinion, and this is the way I'm looking. So that's, and the institution ownership is 68, almost 70%, right? Which is pretty good. Let's take another data points. Okay, this is another good, right? So here with what we're saying, either they are issuing or also purchasing. So purchasing of shares means if they purchase shares, the less it will boost up the price. So overall, this is below zero, right? So for sure, this means they are going and purchasing shares. So that's also good. So not only they are paying dividend, right? One, they're also paying like a regular dividend. They're paying special dividend, right? Not holding the money back. That's what I like it. Many people, many companies, honestly, they sit a lot of cash in their balance sheet and doing nothing. Why not just give to the investor back? Plus, they are also giving back by purchasing shares, right? Which boosts the price up, right? As you can see, maybe I'll put a reminder here. The total return. What is total return, right? How we get the price return, right? The price return plus if it has any dividend, right? If it has a dividend, any dividend yield, right? Or dividend yield or dividend return, right? So for sure, this dividend we'll get it. This is consistent, right? We know. But if this is up, right, or consistent, and if the price goes down, and if the price goes down more, then ultimately we are losing, right? But if the price is also going up and this is consistent as well, this is more like a flow, right? For the big company, we know that it won't go down, and if this price goes up, this is a bonus, right? Then our return should be higher. So this is just a small recap for the total return. Hopefully you like it. Give a thumbs up and let me know. So this is the only way I communicate with my investors community on the YouTube, right? So if you can put a comments and you like it, it's motivates me. Okay, look at here, right? So the price over sales, how much we are paying? We are paying almost $1 for a sale, right? Within the past 2012, it was a flow down, and then recently it goes up. But think from this, not only the sales is going up, but the free cash flow is also going up, and really like it. The company is sorry about that, maybe I'm hiding this. Yeah, so the free cash flow is also up, right? So that's what I like about it. Okay, so this is another. So this is now I'm comparing their operating cash flow to their debt, right? So the blue one is the cash flow, the operating cash flow, which is coming from their core business, or you can say the cash flow from operations. And then this is their total debt, whatever debt they have, right? Long-term debt and all. So you can see the cash is higher than their long-term debts, which is amazing, right? So if the company wants, they can just pay off their debts, right? and with this is on the 2020, so this is on the quarterly basis, so this is great. Okay, now I'll take you to the my spreadsheet and show you what's the intrinsic value, and then we'll cover the matrix and the super. So just let me go. Okay, now I'm sharing my spreadsheet. In this spreadsheet, you can see this is the cash flow model, and using the free cash flow, I try to project the value of the stock. Okay, so right now the price in the market is $383.54. So I have converted this time this free cash flow on the per share basis, right? So it was somewhere around $1 billion. Then I just divided by the number of share outstanding. So that's what I got it. Okay, so this free cash flow, as you can see already, is $13 per share. Debt is 24. As I told you, that's $30 is their cash. So $6 is extra, right? So today, if you buy the company, you pay off the minus the debt, plus you'll get $6 extra, right? So, and plus 13 is on top. Okay, so I have taken the free cash flow. The growth rate here is 19.74%. This is based on their past 2 years of the free cash flow. The reason I haven't taken the 3 years, because 3 years was the cash flow was not, and they spike up in the second year, so it's giving us a little bit of not a correct number. It was very high, and I thought it's better to be conservative, so that's the reason I have taken 19.74 as a free cash flow growth rate. And I am declining that the long-term growth rate. I'm just doing it half. Maybe some people think, oh, it's very conservative, why you are declining all like 50%, but that's what usually I do. Then the terminal value, I take the 15, and as you know, 15 is again 10 to 15 as per the the Pabrai model. I think that's the best. Good quality business is good to have, and then my required return is 10. Okay, so then once I have this number, and this is just plug and play, right? So pretty much I am growing this the free cash flow at the rate of 19 at the rate of this growth rate, and as you can see, I'm dropping this growth rate, and then I'm discounting and using the growth rate, I am projecting the per free cash flow per share price from now to 2030, right? And then in the present value, I'm discounted it back at the rate of 10%, right? So if I do the math on the per share basis, my price is right now $508. That's what I'm getting, right? And as you can see, the market price is lower right now, so which we are pretty good with that. In 2030, the reason I'm getting a little bit higher as well, because I have adjusted the debt and the cash as well. So let me show it to you, right? So I have reduced the debt and plus the cash. So I got like a $6 some cents, a little bit more here, right? So that's the future. If I take all the future cash flow on what I'm trying to do here is, in the English layman term, I take all the free cash flows, what I'm trying to get in the future, and then just discount it by the 10%, and then just add it up, and that's what value. So if I compare honestly with this to my current price, so it looks like it's cheaper right now, right? So okay, so now I use this too, and then try to see what will be my future, what will be my estimated return if I wait or to the drop, or wait and I slip the price, what will be my return look like, okay, in a 10 years time for sure. Okay, so let's see that. Okay, so this is my projected IRR. So basically, if I just go to the market right now and buy the share at this price, and in this one I have already taken this $10 the positive into the account, right? So that's why it's coming 12.52, because within the few days I will get this back. So honestly, so what I have done, 383, then I just reduced the $10 to for this year to compute the IRR. Okay, if I'll wait and assume the if I go into $40, then I'll get almost 12% back. And if I wait further, I hope then I'll get this. But I think if you enter and the price drops, which I really have a doubt, because the news in the market and more people want to buy, and which will push the price up, then, but still, if I'll get enter in 360, I'll get this return. So this is the overall matrix. Okay, so if you just have a look into it. Okay, now the next thing is which super investor is also take part, and how much is their investment, right? So that's the last but not the least, but the surprise. So I find a little bit more confident when some of these big guys also invested in these stocks. So he's none other than Mr. Ray Dalio, right? If you don't know, he runs a very big hedge funds. His book's Principles is very famous, and Bridgestone Associates. And I have his 13th file, which is in November filing. He declared that he has invested in that one. It was in $77,625,000 in Costco. So that's much investment he's done, right? And this guy, if he's invested in these stocks and who has beaten the market since very long, that's the cherry on the top. I thought just share this information. So because price is one thing, right, to get entered, but it's give the confidence. Okay, so that's on this, and sure. And then that's it from this video. I'm hiding very important stuff. Let me see, what is that? This one. So please subscribe to the channel, like this video, it really motivates me, and let me know which other stocks is your favorite stocks, and comment it out, and and hopefully see you soon in the next video, and bye for now. Bye.